Infosys IPO is a lesson in history, and this nearly 32-year-old story still gives me goosebumps if I think about what would have happened had the underwriter to the IPO, had the investment bankers not been able to complete the IPO. The year was 1993, and Infosys, which was a relatively new company back then, just started about 10 to 12 years by six entrepreneurs who came together to make an impact on what is called as the new age industry, the upcoming software industry, the upcoming information technology industry. At this point of time, not many people had heard about computers, software, at least not in India. I was studying in college back then, and even if I had to use the college computer lab for a few hours, I had to take the permission from the director of the college for a few, to get permission to enter the computer lab. Those were the days when software was not a very popular concept in the industry itself, and investors really didn't care about it. The competitors to that were Wipro, which was then clearly nothing to do with software back then, and TCS, Tata Consultancy Services, which was just beginning to start expanding its computers and its IT services business. So when Infosys IPO was launched, not many investors had an appetite to subscribe to the IPO, even though the price seemed relatively fair. It was a 10 rupee IPO and it was being offered at 95 rupees. Unfortunately for the company, on the very last day, the IPO was not fully subscribed, and there was a very real possibility that the IPO might be called off. What would the company do? Remember, the company had appointed a very important agent called as the underwriter. So let's take a look at the underwriter generally today in the finance world and understand the role of the underwriter. In primary markets, the underwriter plays a very important role. That is, the role that if the IPO is not fully subscribed, okay, then the underwriter subscribes to the balance. All right. Underwriter generally is an investment bank which has got very deep pockets and can pick up a larger stake as well. So what actually happens is, in today's day, if the IPO doesn't receive 90% of the subscriptions, then the IPO is called off or rescheduled for a later date. But in the case of Infosys, they had received a lot of subscriptions, but it was still not fully subscribed. Here stepped in an underwriter, and the underwriter subscribed to the unsubscribed portion of the shares. The unsubscribed capital of the shares required millions of dollars by the investor, which they did, which they really did. They put in capital into the company so that the IPO became a success. Okay, it sailed through literally. And what was the share price? What was the share listing price? It was 145 rupees since then. Okay, at the time of listing. So here it goes: 10 rupees, 95 rupees is the IPO price, and the listing price is 145. The underwriter made listing gains, right? The underwriter made listing gains, but he didn't let go. When I use the word he, it means an investment bank. He didn't sell off immediately. And let's see what is the kind of corporate action that has been from Infosys since then. In 1993, when it listed its issue. If you had applied and got 100 shares, because you would have got it, there was no case of oversubscription over here. In 1994, the very next year, they rewarded their shareholders with a 1:1 bonus. Okay? So your 100 shares has become now 200 shares. In 1997, they again rewarded their shareholders, because remember, at this point of time, Infosys was slowly creeping into the US markets for new businesses. Your 200 shares now would have become 400 shares. In 1999, they further issued a bonus of 1:1, and this 400 shares has now become 800. The world was at the brink of the millennium. Okay, so 1999 was the year when a lot of software began to start getting outsourced from India. And the rupee, the dollar rupee today, which it stands at 86, was just about 44, 45. And India was establishing itself clearly as a leader in IT outsourcing. In 1999, they decided not to give bonus, so they changed the face value and they gave a stock split where they reduced the stock face value from 10 rupees to 5 rupees. So your 800 shares is now 1600 shares. That's right. In 2004, they gave a 3:1 bonus, which means that for every one share that you held, you were rewarded with 3 shares. This was the boom of the ICE, boom in the secondary markets. ICE sector, which is information technology, communications, and entertainment. Companies which were in this field were just doing phenomenally well in the global markets, and by this time Infosys ADR was already listed on the US markets. Remember, Google wasn't born till now, okay? In 2006, the company further issued a bonus of 1:1. Your shares now of 6,400 now stand at 12,800. In 2014, another luxurious, lavish bonus issue of 1:1. Your 12,800 shares has now become 25,600 shares. In 2015, a bonus of 1:1 again, thereby doubling the number of stocks in your portfolio. And 2018, a bonus issue of 1:1. If you had applied for 100 shares and got 100 shares, which you obviously would have, in the year 1993, just by showing faith in a upcoming industry. Upcoming industries are called as sunrise industries, okay? Industries whose business models have not yet been vetted by large numbers, by large volumes of trade in the market. If you had got 100 shares by 2018, that 100 shares would have become 1,02,400 shares. Would you have had the capacity to hold on to the stock for 25 years until today? Yes, the investment banker that had underwritten the issue has only sold about half of its holdings, thus making for it Infosys as one of the largest holdings in terms of sheer millions and billions of dollars worth of money. Thus, the spectacle of Infosys in terms of sheer corporate actions has been large. Remember, in this 25 and now 32-year phase, I'm not including the dividends, which have also been lavish. It's like last year, they have given out almost 66 rupees as dividend plus special dividends, etc. So investors, if they had reinvested that dividend, also would have made a lot of money. So I just wanted to highlight the fact that when you fail or when you think you're failing, it doesn't mean all is lost. It means that you can come back. You should be able to fight back and then reward those who have held with you, who have been holding your hand for so long. Lessons of success and failure many a times need not be taught just in a classroom setting. They can also be taught from real life examples such as this. Thank you so much.